Okay, moving right along now. Our next presenter is Anvita Mishra, VP, IR, and Treasurer at Hecla. Hecla is the largest primary silver producer in the United States, but also operates 2 assets here in Canada, including the Carassa mine here in Quebec. Anvita.
Hello, everyone. Thank you so much for having me and for this opportunity. And before I start speaking about Hecla, I would like to take a moment and thank Phil Baker, who's here as well. He had been with the company about 23 years and has recently retired, and the Hecla I'll talk about today was frankly his vision. So Phil has mentored many of us, including me, so thank you for everything, Phil, wherever you are. I've been with the company 17 years, and Hecla is very dear to me. I'm very passionate about it. But I'll be making some forward-looking statements, and I have to caution you for that. So this is all about that. If there are 3 things that you can take from our presentation, there are 3 key messages. The first being, we are the largest US silver producer, and we'll be Canada's largest this year as well. And we are the fastest growing established silver producer in the world. The second being, our silver operations are low cost, high grade, have long mine lives, and they have significant leverage to silver prices. And third, and Gary alluded to that silver's demand fundamentals are very strong. And the demand that we see is being driven by the increase in solar, and the demand that we see coming as well will be really supportive for silver going forward. So with that, I'll dive into the presentation. And what you see here in the map are the operating properties we have, all of them in bold, 4 of them, which we'll talk a little bit more about in the presentation. Then we also have 16 exploration projects all over in North America. We will be producing about 17 million ounces of silver this year, all in US and Canada, and we expect to grow it to 20 million ounces by 2026. And the last that I'd like to point out is that Hecla is 133 years old, and in that culture is embedded innovation and operational excellence that we've been able to execute at all our operations time and again. Safety is the core value of what we do. It's the foundation of everything, and we take a lot of pride in the safe culture that we've been able to develop. The all-injury frequency rate in 2023 was 1.45, and Greens Creek and Lucky Friday, the 2 operations in the US, had their lowest AIFR recorded in the history. Our operations are small tonnage, high grade, so they have small environmental footprint as well. And as a result of that, we've been able to be net zero in emissions for the past 3 years. Going forward, we'll be working more on the carbon sequestration instead of being net zero on emissions. And finally, of course, we are located in Canada and the US, which are in the top mining jurisdictions across the world. We released our sustainability report in mid-May, and there are some numbers listed on the right, so I encourage you all to read it. It has a lot of excellent information, but I think one of the things that strikes me is the impact that we've had on the communities that we operate in. We gave back about $855 million was the economic impact in all these communities. So where is the silver produced in the US, or rather in the world? Silver is produced half of the silver in the world is produced in 3 countries, Mexico, China, and Peru. So the US production is rare, and Canada is even rarer. Hecla is the largest silver producer in the US. We produce about 45% of that silver. And the chart on the right that you see, we had 14.3 million ounces of silver produced in the US, which is about twice that of Teck, which is not even a precious metals producer. So that shows the leverage we have in silver in the US. The silver production that we have is also from a very high quality reserve base, and this chart shows exactly that. Our reserve base is the 4th largest in the world. All of it is in US and Canada. And the larger producers, Pan American and Fresnillo, they are in Mexico and Latin America. And the third, which is Core, is lower grade and is also substantial amounts of that silver is in the US. So that just shows the quality of our reserve base, which leads to the low-cost profile of our silver assets. So what this chart is showing you is the all-in sustaining cost curve of all the silver peers that we have, and we are at the left of it. In 2023, $11.80 was our AISC, and as you can see, it's certainly very competitive, and we expect this to improve as time goes on. We also have a leading and a unique silver-linked dividend policy. So we have a base dividend that is paid, and we have had this since 2011. We have a base dividend that's paid, which is about $0.015. And in addition to that, we have a silver-linked dividend, which moves in lockstep with the silver price. So the green bar that you see is the silver-linked dividend that is paid. So at current prices, if they were to average over the quarter, the silver-linked dividend would be 6 cents on an annual basis. So with that, perhaps we can dive into the details of our operations. Greens Creek is our flagship mine. It's the world's 11th largest silver mine, and we've owned Greens Creek on a 100% basis since 2008. The mine is in Alaska, on Admiralty Island off of Juneau, and we've owned the mine since 1987, but we gained operatorship in 2008. Since 1987, Greens Creek has produced about 21 million tons and mined 355 million ounces of silver. Now the key is that the mine today has a mine plan based on reserves of 13 years. When the mine actually started, the mine reserve plan was about 7 years. So that shows how we've been able to grow the mine consistently over time. The mine has generated $2 billion in free cash flow, and I don't think there are many assets in the world that can boast of that. And ever since we took operatorship, we were able to make this mine even better by the continuous improvements and innovation that we've been able to do. So one of the things that we point out is the increase in silver recoveries. When we acquired Greens Creek in 2008, silver recoveries were about 74%, and today they're about 81, 82%. We've also been able to improve throughput by about 25%. In 2008, Greens Creek's throughput was 2,000 tons per day, and today we are more than 2,500 tons per day, aiming to increase to 2,600 tons per day this year. It's because of this consistency and innovation that Greens Creek has been a constant, significant free cash flow generator, and this chart shows exactly that. The $2 billion in free cash flow on the left on a cumulative basis, and the return this asset has generated is about 123% based on the acquisition price that we paid in 2008 for the 70% ownership that we acquired. Lucky Friday is a mine in Idaho, and it's our second cornerstone asset. It's an 80-year mine, and it still has a mine plan of 19 years ahead of it. Now, this mine has evolved continuously, and the most recent example of our innovation is the underhand closed bench mining method, which has significantly improved the safety of this mine. Now, it's a deep mine. It has improved the safety of the mine and improved productivity of the mine remarkably. The mine is about a 5 million ounce producer. It would have produced 5 million ounces in 2023 as well, but we had an unfortunate fire event at the Lucky Friday in its secondary egress. So the mine did not produce from about August to December. The mine is completely ramped up to full production in the first quarter this year, and we expect it to exceed 5 million ounces this year. We are working through our insurance provider and expect to receive about $50 million in insurance proceeds through the year, and about 17.5 were received in the first quarter. So even though the mine has an 80-year history behind it, we still think that the best decade or the best period of the mine is ahead of it, and exactly because of the UCB mining method, which has done remarkable improvements to productivity and safety at the mine. Keno Hill is our newest mine that we acquired back in September 2022. It's in Yukon, and we are currently ramping it up to full production. The mine is expected to produce about 2.7 to 3 million ounces this year. Since we acquired it in September 2022, we've been able to increase the reserves at this mine by 45%. It's one of the highest grade primary silver mines in the world, with reserve grade of more than 25 ounces per ton, 26 ounces per ton. The ramp up at the mine has been slow, and it's primarily because the safety and the environmental processes that we acquired from Alexco, which was the previous owner, were not at Hecla standards. So we've been working through them. We are showing significant improvements, incremental significant improvements quarter over quarter. But I think the key is that the mine has an 11-year mine plan, and it's important that we set the stage for the next decade ahead. And so that is taking the time and the investment that is needed to make this mine the next Greens Creek or Lucky Friday in our portfolio. Early February this year, we released the technical report for Keno Hill, and this slide highlights that it has an 11-year mine plan, is expected to produce more than 52 million ounces of silver in these 11 years, with an average 5-year silver production of 4.4 million ounces. At $22 an ounce, the after-tax NPV of this mine is more than 300 million. So you can see the leverage it has to silver prices, where silver is almost $30 an ounce today. Casa Berardi is our gold mine and our only gold asset in the portfolio currently. It's in Quebec, and until about 2022, we were among the top 5 gold producers in Quebec. That changed in 2023 because Casa Berardi, our gold mine, is undergoing a transition from an underground and open pit mine to a complete surface mine this year. The mine has been very important to our portfolio, and the next few years are key to Casa Berardi because we are working through the transition as we go. However, the mine will still be free cash flow positive on an aggregate basis from 2024 to 2027, and then we are expected to have a couple of years of production gap as we work through permitting the higher grade open pits, which are the West Mine Crown Pillar Pit and Principal Pit, which are expected to come into production in 2030, and it's after that that the mine generates significant amounts of free cash flow once that stripping and investment is complete. The after-tax NPV, so I should perhaps go to this slide. So in February, we released a technical report in Casa Berardi as well, and this slide highlights the economics of that. The after-tax NPV at $1,950 gold is expected to be $356 million, that you can see here, and the mine is expected to produce 1 million ounces of gold from 2024 to about 2038. And again, in this is embedded 2 to 3 years of production gap because we'll still be permitting our higher grade open pits. A snapshot of what our financial highlights look like. Silver is about 40% of our revenues. This is based on 2023. And the slide on the right shows the free cash flow generation out of our silver mines, being Greens Creek and Lucky Friday since 2020. So for the past 4 years, we've generated $575 million almost in free cash flow, which is substantial from these 2 mines, and we are taking this free cash flow and investing it in Keno Hill's ramp up and the Casa Berardi transition that I just talked about. What I'd like to leave you all with is a few notes on where silver supply and demand is and where we see silver demand heading. So the pie that you see on the right is it talks about where the silver supply is. Silver supply demand is about a 1 billion ounce market. Silver supply mostly comes from mine production, which is about 80% of the supply, and the rest 20% is recycling. The pie on the left shows where this demand is. So about 55% of silver demand is industrial because of silver's use in electronics. But more importantly, it's the use in solar panels, or rather solar or photovoltaics, that has really seen or changed the trajectory of silver demand going forward. So for the past 5 years, silver demand in solar has increased at an annual rate of 17%. And today it's about 194 million ounces, which is about 16% of total silver demand. And we expect this silver demand in solar to continue. And why is that? It's because of this chart. What this is showing is that, and this is from Energy Information Administration Agency in the US. This shows where the electricity generation in the US is projected to be. So by 2050, solar will account for 1/3 of total electricity generation in the US. And this is just in the US, not even globally. Now, about 1 gigawatt of solar installation needs 0.45 million ounces of silver. And it's because of that that we see silver's demand in solar continuing to increase. The new silver panels, or the silver technology used in silver panels, is more efficient, uses more silver. That's the chart on the left. So about 30 to 120% more silver is used in newer technologies of silver. And these newer technologies are also gaining market share. And that's what we show on the right. So we are very bullish on silver. And if you're looking for a name to invest in silver as you go forward, I'd say please do consider Hecla. And this is the last slide we have, which shows the guidance across our portfolio. We expect to produce about 17.5 million ounces of silver this year at low costs. And by 2026, we expect to produce up to 20 million ounces of silver. And I believe that's my last slide. And if you all have any questions, I'd be happy to take it. Please go ahead.
Hello. So I was very interested in how you mentioned how from 2021 to 2023 you had net zero emissions. And I was wondering what kind of technologies enabled you to reach that level of environmental sustainability, even just based on how you usually have low tonnage, low production rates. So I was just wondering what other technologies enabled you to reach that goal.
So I think you're exactly right. That is because of the lower tonnage operations, higher grade nature of those operations, that we were able to have, or have the carbon offsets to be able to be net zero. But what we've certainly realized is that as we, and to point out to that, we have automation at most of our mines that helps with being lower on the carbon emission perspective. But going forward, what we've realized is I think it'll be more prudent to invest in those technologies furthermore and work on research to do carbon sequestration in our operations. So Casa Berardi, especially with going to surface operation, will increase. We'll see higher emissions as well, but still smaller compared to other very high tonnage operations that you see across the globe.
All right. Thank you.
Well, thank you very much for all your time. And if you all have any questions, please do come and find us. Thank you very much.